4 questions 50% CFA Level 1 candidates fail to grasp. Differentiate between conservative and aggressive accounting. Question 5. Which of the following statements best describes a key difference between conservative and aggressive accounting choices? A conservative choices increase current reported performance, while aggressive choices decrease it. B. Conservative choices recognize losses when they are probable, while aggressive choices may delay recognition. C. Conservative choices create a sustainability issue for future earnings, while aggressive choices do not. Correct answer, B. Conservative accounting. It's all about being prepared for the worst and covering all your bases. You want to spot losses and expenses early on, especially when they seem likely, like if you're facing a lawsuit or something. But don't jump the gun and declare gains or revenues until you're absolutely sure they're coming in. For instance, you might want to acknowledge a possible liability for a lawsuit as soon as you think it's likely, even if you're not sure how much it will cost. The key to being conservative: you're more likely to see losses than gains. Aggressive accounting. This approach aims to make current period earnings look better by either holding off on recognizing losses or speeding up the recognition of gains. For instance, they might wait until they're absolutely sure an asset is worthless before writing it off. It's all about playing with timing to give a misleading picture of how well a company is doing financially. Example, reducing bad debt expenses to give a quick boost to profits. A. Incorrect. When companies use conservative accounting, it can make their current performance look a bit weaker. Think lower net income, more expenses, and fewer assets. On the other hand, aggressive accounting can make their current performance seem better. Higher net income, fewer expenses, and more assets. Choosing a conservative approach can create hidden reserves, like overestimating expenses, which might lower current earnings, but could actually help them out later. Conversely, aggressive choices can inflate current earnings, which might not be so great for the future. C. Incorrect. When companies use aggressive accounting, it can sometimes lead to lower earnings in the future if the overstatements are corrected, like when assets are overvalued and need to be written down. On the other hand, conservative accounting might create cookie jar reserves, like overestimated liabilities that can be released later to make earnings look better. But this is often seen as a way to manipulate numbers, not as a way to make the company more stable. The idea that earnings are sustainable depends on how well the company is doing in real life, not just what the accounting says. People have been critical of earnings smoothing, which can happen when companies switch from being too aggressive to too conservative, because it can hide the real ups and downs of the company, not because it makes the company more stable. Question 4. A company makes a conservative accounting choice in the current period. The most likely immediate effect on its financial statements is A. An increase in reported revenue. B. A decrease in the value of reported assets. C. A decrease in the amount of reported liabilities. Correct answer, B. Conservative accounting choices involve making decisions that lower the financial performance or position shown in the current period. Here's what makes them stand out. They focus on expecting losses, but not gains. They might delay when revenue is recognized or speed up when expenses are recorded. They could lower the value of assets or make liabilities seem larger. These choices are designed to give a more careful and sometimes more trustworthy picture of the company's financial well-being. When it comes to conservative accounting, you might see writing down assets, like when you record a loss for something like a fixed asset or an intangible. Boosting contra-asset accounts, such as increasing the allowance for doubtful accounts, which lowers the total amount of money you expect to get back from customers. Acknowledging potential losses that might happen, like setting aside money for a lawsuit or a warranty. For instance, if a company decides to increase its allowance for accounts that might not be collected, it means the total value of the money they're owed, an asset on their balance sheet, goes down. This shows they're being more careful about how much they think they can get back. Similarly, if you realize an asset is no longer worth as much as you thought, like because it's outdated, you'll have to lower its reported value. While conservative accounting might sometimes show higher liabilities, as you mentioned, decreasing asset values is a more straightforward impact on financial statements, and a typical result of this approach. It directly aligns with the idea of anticipating losses, but not gains. For example, raising a liability, like a warranty reserve, is a conservative move, but the focus here is on the immediate effect, which is usually a decrease in asset values, such as writing off inventory or increasing allowances. A. Incorrect. Conservative accounting delays revenue recognition, unlike aggressive accounting, which increases it. C. Incorrect. Conservative accounting increases liability estimates, while aggressive accounting decreases them. Thumbs up and subscribe this channel. Question 3. According to the curriculum, which of the following is most likely identified as a potential benefit of accounting conservatism? A. It ensures financial reports are neutral and free from bias. B. It increases the relevance of information for equity investors. C. It protects lenders by anticipating potential losses early. Correct answer, C. Accounting conservatism is all about being careful when we report financial information. It means we try to guess that we might lose money, but we don't get too excited about making money. Here are some good reasons why it's a good idea. It keeps everyone safe when they're lending money, like lenders or creditors. Lenders don't always have the full picture of what's going on inside a company. Conservatism helps by making sure we spot potential losses early on, like when we write down assets that aren't worth much or increase our bad debt reserves. This way, lenders are better prepared for any problems, which helps prevent them from getting caught off guard if a company defaults. Lowering legal expenses. By not inflating assets or earnings, companies can avoid lawsuits from stakeholders who might feel they've been misled. Shielding from oversight. Conservative reporting helps companies dodge unwanted attention from regulators and politicians by steering clear of overly positive financial reports that could stir up trouble. Potential tax benefits in certain places. In countries where tax reporting is closely tied to financial accounting, like Germany and Japan, being conservative can help companies delay tax payments by keeping reported profits down. Information asymmetry. Lenders use financial statements to figure out how risky lending to a company is. Being careful means they see any losses as soon as they happen, which gives them a clearer picture of whether a company can pay back what it owes. For instance, if a company has some accounts that might not be paid back, being careful means they set aside more money for doubtful debts. This lowers the company's total receivables and lets lenders know there might be some credit risk involved. A. Incorrect. Neutrality in financial reporting means unbiased reporting, while conservatism introduces a downward bias by recognizing losses earlier than gains. Conservatism protects stakeholders but violates neutrality. B. Incorrect. Conservatism in accounting, while improving reliability, can reduce relevance for equity investors by understating potential upside and dampening growth signals. Question 2. Which of the following accounting choices is most consistent with a conservative approach? A. Increasing the estimated useful life of a patent for amortization purposes. B. Recording a provision for a potential litigation loss that is considered probable. C. Capitalizing a larger portion of internal software development costs. Correct answer, B. Conservative accounting is a way of doing business where you're expected to acknowledge losses and debts as soon as they seem likely. This means you might not see gains and income until they're almost certain to happen. It can make it seem like you're more likely to face bad news than good news. For example, if you think you might have a lawsuit coming up, you'd want to record that as an expense right away. This means you'll have to pay for it in the current period, which can lower your reported earnings. It also means you'll have more debt on your balance sheet. Both US GAAP and IFRS say you should do this when you think a loss is likely and you can figure out how much it might be. A. Incorrect. Making a patent last longer. It spreads out the cost over more time. It cuts down on what we pay now. It makes our earnings look better than they are. This isn't very careful because it waits to show the cost. C. Incorrect. Capitalizing more software development costs means we're putting those expenses off until later. This also adds an intangible asset to our balance sheet and boosts our current period's net income. For instance, WorldCom's fraud was partly due to them capitalizing line costs instead of expensing them. Conservative accounting signs include writing down inventory to the lower of cost or market value, using a faster depreciation method, setting aside larger amounts for doubtful accounts, recognizing impairment losses quickly. Aggressive accounting signs involve exaggerating asset values, minimizing liabilities, postponing expense recognition, speeding up revenue recognition. One crucial questions. Question 1. A company makes an accounting choice that decreases its reported performance in the current period, but is expected to increase its reported performance in a future period. This choice is best described as A. Aggressive and creating a sustainability issue. B. Conservative and potentially creating hidden reserves. C. Neutral and enhancing the faithful representation of earnings. Correct answer, B. This is accurate because conservative accounting methods can make a company's performance and financial health look worse in the current period. However, these methods might boost reported performance in the future, potentially by building up hidden reserves. This is a conscious effort to skew things in a certain direction, rather than being completely balanced. A. Incorrect. Making aggressive choices can boost how well you're doing right now, but it might not be great for the future, which could cause problems down the road. However, the scenario we're looking at is the opposite. C. Incorrect. It seems like the choice is intentionally skewed to move earnings around from one time to another. This kind of manipulation makes the reports not accurately show what's really happening in either period, without any bias.